And you can start.
Wait. Just a minute, please. Uh,
You can start now, man.
just hold on a minute. I'm not able to see the YouTube, Zoom link.
Okay.
Can you see me now?
Yeah,
You can
madam.
see me now? Yeah,
Yeah,
okay. You can start now, please.
yeah, you can go ahead, madam. You can go ahead.
Okay, good evening, all of you. Uh, if you have any questions, I'll be very happy to answer. I believe there is one question. So I'll request Nilotpal to read out the question.
Ma'am, I have put that in the chat box.
I cannot see the full question. You are okay. What are the options can give a customer in order to give a treasury solution point of view? Is Mr. George Michael asks, this is questions related to Fed rate cut and what are the options can give a customer in order to give a treasury solution point of view? So, I would like to not answer this question directly because this question doesn't relate it to the commodity derivative market, and any interest rate cut has a impact on any financial instrument which has a interest out interest outgo or interest income. So definitely the treasury of a particular organization, a treasury part of a particular organization will be affected by the Fed rate cut. But because this is not directly related to the commodity derivative, I would not like to go beyond this point on what I asked, what I answered. Nilotpal, is there any question?
Yes, ma'am. Avinav Mudgal asked, I would like to kindly inquire about the nature of questions that we can expect in the final exam.
Okay. Mr. Mudgal, good evening. Please note that NPTEL has a very, very standard format of questions. So please note that all these questions are going to be of similar nature of what we have done in each of these assignments. So if you have done the assignments questions, and if you have gone through the solutions provided for the assignment question, as well as the videos of video lectures, which is available on a weekly basis, I don't think, you will not be able to answer any specific question. So it is to answer your question in a brief, it is please practice all assignment questions thoroughly. You should be able to do a large number of, large number of questions from that assignments. And some questions will be not exactly directly from the assignment. There will be some variation or some new questions, but if you have seen the videos, you will be able to answer these questions.
Ma'am, there is a question in the chat box.
Yes, I can see Mr. Pradipta there. Pradipta, good evening. Let me read out your question. Greetings, madam. I'm a student due to subject pressure. Currently, I am just trying to give the weekly test with the help of my weekly notes. I'm not actually being able to study hard for this course. However, I have registered for the examination. Is it enough before the exam? I only go through the weekly material and give the exam. So Pradipta, you are absolutely right. All these, PPT, all these videos, if you are able to see, and also the assignment questions you are, weekly assignment questions you are answering, you don't need to study anything, any other material. So this end term examination is very, very clear. It will come from whatever is being discussed in the videos, and it will also have a lot of similarity with the questions which we have done in all these 12 weekly assignments. Every week we have about 10 questions. So in each of these week, that is 12 weeks, you are basically answering 120 questions. So please be rest assured, you answer all these questions and go through the videos. And I'm very happy to note that you have mentioned that you have already made notes. So I think you are well prepared. Anilutpal, is there any other question?
No, ma'am.
Okay. So thank you, Pradipta. You have been one of the very serious student, and it is very, very satisfying and very happy moment for faculty that when a student is very serious, very sincere, answers all those quiz questions and all that. So it's pleasure, though we have never met in person, but it has been a pleasure to connect with you. Abhinav Mudgal. Good evening, Mr. Mudgal. I would like to ask how many questions can we expect in the final exam? This will help me in planning my preparation accordingly. Nilutpal, we have 60 questions. Am I correct?
Yes, ma'am. 60 questions.
60 or 50 questions?
Ma'am, 60.
60 questions. So, Mr. Mudgal, we have 60 questions. The exam duration is
2 hours.
2 hours, and the questions, a large number of questions will be kind of a similar to what we have asked in the assignments. However, few questions will be little different. This will come from the videos and lecture material videos. So if you have gone through the videos, you will be able to answer correctly. So let me summarize. There is going to be 60 questions, each consisting of total marks is 100. Am I correct, Nilotpal?
Yes, ma'am. 100 marks.
So total marks is for 100 and duration is for 2 hours. And for calculations, the online calculator will be available to you in the system in which you are sitting and appearing the exam. And in any case, the calculations are simple calculations. There's not much mathematical calculations is required. Het Patel, the clarity you bring to the topic or subject, ma'am, much more interesting and insightful than I thought at the starting when I registered for the course. Thank you. Het Patel, it is such a, again, happy moment as a faculty member that we are able to, we are able to share certain aspects of the academics which you are finding it interesting. And thank you for your comment, and it really means a lot to me as a teacher. George Michael has posed a question. Mr. George, let me read out your question. I would like to know the exam date will be the same on the 3rd November. Accordingly, need to book my ticket. Nilotpal, when is the exam date?
I'll have to confirm it once again because I don't exactly remember the date, but ma'am, the date is available in the forum. Again, I'll see and confirm.
Mr. George, the exam date is mentioned in the forum, and I don't recall the exam date because as a faculty, I give the questions and the exam is taken care on an online mode. So what we will do is today that my student Mr. Nilotpal is going to be answering this question in the forum and to all sharing the date of the exam. Exact date of the exam. Thank you. Thank you, George. Okay, let me read out Heath's question, Heath Patel's question. As of now, the algo trading is much used for derivatives. So now basics are getting clear for derivatives. So ma'am, can you throw some light on how to get the coding path and combine both? Heath, I think you have asked this question to the wrong person. I am a professor of finance and I understand the derivative markets. I understand the importance of algo trading and all that. But honestly speaking, I have never done any research on what kind of algos are created, what kind of coding is required. I know algo trading is a significant part in derivative market, but I will not be able to answer your question today. Let me go back. Let me read a little more. Maybe in the next time when this course is offered, I'll try to have a session on algo trading in commodity derivatives market. Thank you for giving me this idea. Though I have discussed many aspects of commodity derivative trading, but I have not gone into any discussion related to algo trading. I'll be able to do that. But for the time being, Heath, I will not be able to answer your question. George, his question, would you like to check this course certification can be attested in UAE Ministry of Affairs? George, thank you for raising this question. I will escalate this question of yours to the NPTEL team. Maybe they will be able to address this. And as I understand, a lot of foreign participants are also taking various courses offered by NPTEL. And these certifications are valid like any other digital online courses. So exactly how to get them attested from the UAE Ministry of Affairs, etc., it will be, again, we need to check whether if at all it can be done or if it cannot be done. Again, today I don't have any answer to your question. But what we will do, Nilotpal, can you please save this question?
Sure, ma'am. Sure.
Okay, so what we will do, George, is that we are going to put your question, quote unquote, exactly your question to the IIT Madras NPTEL team, which is the coordinator for all courses related to NPTEL. And we will see if they can help you or help answering this question. I would request also, George, if you can send this particular question in the forum. So what we will do, we'll connect you to the NPTEL IIT Madras team, and so that, if they are in a position to help you, they'll be able to directly get in touch with you. So George, I would say that please, I request you to pose this particular question in the forum. That would help the matter a lot. let me just let me answer your question. So your question is, if a manufacturer company buying zinc 50 metric ton, tenor is 1 month, they want to meet the price risk for zinc, could you please help me to guide the customer? Judge, what we have discussed, the buyer here in this case is wanting to buy zinc for 50 metric ton. Fear is that if he does not do anything in this 1 month, price is going to go up. So its best thing to do is that to go ahead and enter into a zinc futures contract. So whether then it has to be seen whether the zinc as a base metal contract is available for trading or not. So to best of my understanding, LME offers the zinc contract. I don't remember whether Chicago Mercantile Exchange offers this zinc contract or not. But wherever exchange is, wherever zinc contract is available, if the if the buyer wants to hedge the risk, it can enter into a long futures contract. And it should choose a maturity which is closer to the actual physical market operation. So for example, let's say today is 25th September 2024. Let's say as an organization, I want to buy zinc, or my company wants to buy zinc, let's say on 20th October 2024, which is about 25 days, 26 days from today. So I would advise my organizations to probably enter into 2 or 3 contracts. It's a how risky or how sure this particular company's the derivative trader is sure about the zinc price going up. If it's pretty sure that the zinc price is going to go up, it is going to enter into, maybe it can enter into 50 metric ton worth of futures contract. Otherwise, the zinc, the manufacturer can enter into 10 metric ton, 15 metric ton, depending upon the number of futures contract they want to take. And if they want to enter into 20 metric ton or 25 metric ton, that means they would be hedging, partially hedging. They're not completely hedging the risk associated with the 50 metric ton. If they want to completely hedge, they would probably enter into futures contract having an underlying of 50 metric ton and a contract which is closely matched, whose maturity is near to the actual physical delivery requirement. As we discussed, physical delivery requirement is 20th October 2024. So the company should choose a contract whose maturity is closer to 20th October 2024. In fact, in reality, it should choose a contract which is, maturing later than 20th October 2024. So the day the company buys zinc from the physical market, this same day the company can square up the futures contract. So initially it will enter into a futures contract, and after buying the physical zinc from the open market, the company can square up the long futures contract. And here, one of the important assumption is that the company is not taking delivery from the exchange. So as we have discussed, a company can take delivery only when the contract matures, a futures contract comes to a maturity. So if my requirement is on 20th October, as a company, I require zinc for some of my manufacturing activity on 20th October. If the contract is maturing on 25th or 26th of October, I should not be waiting till that long. So I enter into a futures contract whose maturity is later than my physical buying requirement. And the day actually the company buys the zinc, same day the company can go ahead and square up the long futures contract. Of course, please know, I don't know your the company where this company operates, whether if it is a foreign company, then if they are going to the LME for hedging the risk, they should be, they should be going through a broker. The broker also has to be paid in US dollar terms. So those foreign exchange part also comes when a buyer is in one country and that particular buyer's that particular company's currency denomination, operational currency denomination is not in dollar terms. So if the company is, let's say, if it's a Indian company, it wants to hedge zinc price risk at LME, then it will be taking exposure to dollar price risk. That also is another angle which needs to be looked into. Because your daily mark-to-market margin, all this will be governed by the dollar price. But if your company is, for example, at MCX, we have zinc futures contracts trading. So if the company is an Indian company, it wants to mitigate the zinc price risk, it can enter into long futures contract at MCX. And it will be paying or receiving daily mark-to-market margin, the concept which we have discussed in detail. Here, there will be no risk of foreign exchange because both the contract as well as the operational currency of the company and the contract are in same denomination, which is in rupee terms. George, I hope I have been able to answer your question. It is a little long answer, but I hope you have been able to, get the essence of my answer. So the question is Dubai and going through a bank, and settlement is in cash. Yes, as I said, George, that your client, if it is based in client, if it is a, if your client is based on Dubai and the currency, the revenue, whatever the revenue, the expenses of this particular company, if it is other than in US dollar and it is going through this LME futures contract through a bank, it will be having some kind of a US dollar risk. And of course, it depends upon what kind of arrangement this particular company with its bank. So the bank may be giving the US dollar mark-to-market margin, and whatever the cost may be incurring, this particular bank would be incurring, that may be priced to the client in the local currency terms. So in that case, the company is not directly influenced by the foreign exchange risk, but indirectly influenced by the foreign exchange risk. But because anyway, the bank is going to charge whatever the foreign exchange risk to the company. So, George, if your company wants to wants to enter into LME, zinc contract in LME, or which exchange are you thinking of? Okay, so bank deal through LME. So then it is straightforward. Maybe you, because your company would be a client with the bank, they don't have to directly take exposure to the US dollar. The bank itself will be a trading member of the LME, so that part, daily mark to market margin, etc., will be taken care of the bank. So that's not a big issue. So if you have to advise your client, you can advise your client to enter into long futures contract, into a contract maturity, which is maturing at a later date than when exactly the company needs zinc. As I said, if company needs zinc on 20th October 2024, they should enter into a futures contract, which is maturing after 20th October 2024. And also, it depends upon if the company wants to enter into, company's requirement is 50 metric ton. Then you have to see what is the minimum minimum trading lot in LME. To best of my understanding, it could be 5 metric ton or 10 metric ton. I don't remember the contract specification. So depending on the contract specification, and the company would need to decide, or you need to decide whether the company wants to completely hedge the risk. If company wants to completely hedge the risk, you advise your clients to enter into the number of contracts whose underlying will be equivalent to 50 metric ton. If the company is not sure that whether the link price may go up or go down or remain neutral, so accordingly, the company can enter into a contract, less number of contracts. Total underlying need not be equal to 50 metric ton. So this is, if you are advising your client, then you have to, at this point in time, you have to do a little bit of research to give a guidance to your client, saying that what is your expectation related to zinc price, whether zinc price is going to go up or going to go down in coming 2 months, and why are you why are you thinking whether it will go up or go down or remain neutral? What are the factors are you considering? So it is worthwhile for you to do your due diligence and come up with a small report of your expectation related to whether the zinc price is going to go up or go down or remain neutral. Accordingly, you can advise your client. If you are very sure that zinc price is going to go up, then you can advise your client to enter into long futures contract on zinc, having underlying a 50 metric ton, if you're pretty sure that zinc price is going to go up. Let me answer. USD currency is pegged with AED. Yes, absolutely, George. So every currency is pegged to AED. So that's not like INR, Indian rupee is also pegged to USD. That's not a issue. It depends upon what is the functional currency of the client you are talking about. If your client earns in AED and your client's income is in AED and your company expenses are also in the same AED, then definitely there is a foreign currency risk. But if your company's earning is in US dollar and company's expenses are in US dollar, entering into this LME contract does not have any foreign exchange risk. Otherwise, any other currency other than USD, there will be some amount of foreign exchange risk in terms of daily mark-to-market margin. Because your bank is going to give or receive the daily mark-to-market margin if your company goes ahead goes ahead and enters into a long futures contract. The bank who is entering the contract on behalf of your client. So that particular bank is going to be receiving daily mark-to-market margin or paying daily mark-to-market margin. And if it is LME contract, it will be priced in US dollar. I hope I have been able to explain answer your query to your satisfaction, George. So, Pradipta, your question is, do semiconductors have forward contracts if India becomes big player in semiconductor or production with the help of the Chinese machine? Will export be measured in USD or INR? Okay, this has two questions, Pradipta. The first question is, do semiconductors have forward contracts? Yes, Pradipta, it's a normal transaction between two companies. Suppose a buyer of a semiconductor feels that there is going to be significant amount of shortage of semiconductors intake going forward. They can enter into a forward contract agreement with the manufacturer and say that, okay, we require a semiconductor of whatever may be the specifications and all that, and the price, they can negotiate the price. Please note that these forward contracts are bilateral contracts. This could be signed between the semiconductor manufacturer and any other semiconductor buyer. That does not come to the public domain. Forward contract terms and negotiation terms and specifications are very, very private. Hence, we don't get to see the actual terms of negotiation of a forward contract. So forward contract happens on a daily basis. The whole concept of supply chain management, buyer-seller agreement, vendor client agreement, all these mostly have a forward contract type, that I need something at a later point in time, and I'm fearing that either the price will go up or either that particular underlying item will not going to be available. So if as a buyer, I'm fearing any one of these or both of these, I'll enter into a forward contract with another counterparty. That happens pretty regularly, very much happens between companies. Now the question is, India becomes a big player in semiconductor production with the help of the Chinese machinery. Will export be measured in USD or INR? Please note that see, it's a company. If Indian company wants to price it in INR, if it wants to price it in US dollar, they can do so. But let's assume that an Indian company, which is its expenses are in INR terms, salary expenses, all manufacturing expenses, taxes it is paying in INR. This particular company would like to sell semiconductors in INR terms because it will give a natural hedge. Your income is in Indian rupee and your expenses are in Indian rupee. So Pradipta, if you have some time, read the concept of a natural hedge. So that natural hedge means that my expense and my earning, my revenue and expenses are in the same currency. But if a particular Indian company wants to sell it in US dollar, and if it is a product which is globally demanded, there are a lot of foreign buyers who are willing to pay US dollar. There's nothing wrong. Companies can price it in US dollar, and anyway, once they get the US dollar, they can convert it into INR rupee. So it depends upon where the Indian company wants to operate, where the Indian company wants to sell, and most likely if it is having a global client, buyers are globally, it will be priced in US dollar. Pradipta, I hope I have been able to answer your question. Thank you, Pradipta.
Ma'am, there is a question.
One of the HRs is leaving from prison, so she's coming down. I'll just let you know. थोड़ा सा hello है this way.
Yeah, Nilotpal, just let me take the question. Does company like EY and JPM help clients with future intelligence on investment portfolio to mitigate their risk or help them go into a green field of venture or both? Pradipto, I'll be not in a position to answer your question. Obviously, these are consulting organization, banks, they must be helping clients in quite a few different manner. But I don't have, I think I will not be able, I'm not in a position to answer this question. So I would like to, skip this question. Will this Fed rate card help customer to go for an interest rate swaps or obviously, George, what I am, reading from different newspapers and all, this Fed rate cut of 50%, 50 basis point is not going to be the last Fed rate cut. It is expected that the Fed rate is going to be going down for some time to come. Again, that is what I have read from different newspapers. So if if I'm expecting that interest rate in the future is going to go down, definitely if I am holding or if I'm going to be investing in a interest rate contract and I'm expecting that I'm going to get lesser interest rate, obviously I'd be interested to enter into an interest rate swaps contract. So it depends upon your second question, or what are the possibilities? So the possibilities are, right now people are talking about that this 50 basis point cut is not going to be the last interest rate cut. It is going to be in future. This is going to be happening maybe, another some time to come. Interest rate is expected to go down. So if that is happening, there is going to be definitely a lot of interest rate swap agreement being entered into different banks and clients. Maybe you have access to, if you have access to Bloomberg data, you can see, over the years, how many, whenever there is an interest rate cut, what happens to the interest rate, how many new interest rate swaps are getting transacted and all that, if you may have to do a little bit of search to identify on relationship between Fed rate cut and the interest rate swaps. So I feel this must be happening. This is going to happen. Though I don't work on, I've never done any research on interest rate swaps. So this is my general understanding as a finance professor. Nilutpal, am I audible what I'm speaking?
Yes, ma'am, you are audible.
Okay. Thank you. Thank you, George. Thank you, Pradipta.
She has a flight session.
So, NPTEL team, I think it's time. I would like to, as there are no more questions, I would like to log out now. NPTEL team, can I log out now?
Yes, no, you can, madam.
Okay, so thank you all of you. Thank you all of you.
Hello.